moderate this discussion is going to be Jesse Knutson. You do pronounce the K, he just told me. He is working at Bitfinex Securities, and his work there focuses on creating a seamless infrastructure for security tokens, building a bridge that brings institutional-grade solutions to the world of decentralized finance. Try saying that after a few beers this evening. Okay, please join me in welcoming Jesse Knutson to the stage. He will then introduce the speakers. So Jesse, the stage is yours.
Great, thank you very much. My name is Jesse Knutson. I'm head of operations at Bitfinex Securities. We have a very interesting panel here today and some very distinguished panelists. So I think first we'll welcome out everybody. We're a little bit pressed for time, so I think we'll quickly go through introductions and then we'll jump right into the conversation. So Adam, do you mind coming out first? I think everybody just come out. I'll let you do introductions yourself very quickly. Just everybody come on out. All right, so we've only got 25 minutes, so we're going to run quickly through introductions and then jump right into
29.
We want to leave a little bit of time for Q&A.
Okay.
All right, so Adam, can you start?
So I'm Adam Beck, co-founder and CEO of Blockstream, and a very long time ago invented Hashcash for anti-spam, which is now Bitcoin mining algorithm.
Great, Paolo?
And Satoshi.
No.
Not according to HBO. I'm Paolo, CEO at Tether. I like Bitcoin and freedom of speech and peer-to-peer telecommunication and almost everything that makes us more resilient.
So I'm Yves, I'm the CEO of Tobam. Tobam is a quant asset management company. We met with Bitcoin in 2013, very, very late.
And I'm Alexandre, digital assets lead at Accenture and focused on Bitcoin institutional adoption.
Okay, very good. First question for you, Yves. In your conversations with regulators or policymakers, investors, how do people look at Bitcoin now? Do you get the sense, our topic is about Bitcoin's role as a store of value in the new financial era. My question is, in the current financial era, do you think that these people are looking at Bitcoin now more as a store of value, or is it still as a speculative asset?
In my mind, there's no doubt Bitcoin is not a store of value yet. It's completely inappropriate today to say I'm going to store value in Bitcoin if I have a 6 months horizon. So Bitcoin is a project of store of value. Bitcoin is not yet completely a currency. It's a project of a currency. It's a startup. This is why its price is so ridiculously cheap today. And this is why its volatility is high, in fact. Both volatilities and prices are connected with adoption. The more adoption there will be, since there is only 21 million Bitcoin and there is 100 million millionaires in the planet, as soon as people will want to buy Bitcoin, the price will go up. And this hasn't happened yet. On the other side, you have volatility. Why is Bitcoin volatile? Because there are only two possible scenarios for Bitcoin going forward. Either in 10 years, Bitcoin price will be below 5,000, or it will be well north to $1 million. And it is a conflict between those two scenarios that materializes into volatility. We are looking at Google in 1997. And Google in 1997 was worth either zero of trillions or trillions. And this is why startups are not priceable. Nobody can, in fact, price a startup. And this is why, and when they are not priceable, what is volatility? It is the inability to price in assets. The more the adoption will increase, the more the price will increase, and the lower the volatility will be. The dilemma of any clever investor today is either I buy Bitcoin today, that it's very risky, but ridiculously cheap, or I wait until it's less risky and buy it much more expensively.
Okay, given as an asset manager and a whale in the industry, and the price outlook sounds very positive for Bitcoin, what would you do now as an investment? How would you allocate assets?
If I was a whale?
If you were a whale.
If I was a whale, I think it would be very, very easy for me to do about, I have computed that, about $20 billion in the next 2 weeks. So if you, by chance you ever meet with a whale here in Lugano or elsewhere, this is my piece of advice for them. If you have plenty of Bitcoin, sell Bitcoin and buy MicroStrategy. Why? There is a growing premium between MicroStrategy and Bitcoin, if you have observed that. I think that over 6 months, the price of Bitcoin is up 5%. The price of MicroStrategy is up something like 80%. How come? That's magic. There must be an explanation for that. What is the explanation? The explanation it is that some whales got it. They are building the short squeeze. There are some people that are shorting MicroStrategy saying, this premium is absurd. I'm going to sell MicroStrategy and buy Bitcoin. But there's somebody stronger or fatter, a whale, in front of them, which is in fact selling Bitcoin to them. You want Bitcoin, stay them. This is why the Bitcoin is not moving. We have plenty of good news for Bitcoin, and Bitcoin is not moving. How come? There is somebody selling Bitcoin. Who can sell by Bitcoin? Apart from people that have plenty of Bitcoins. So there are some whales here selling Bitcoin. You want Bitcoin? Take them. Take them. You want to short sell MicroStrategy? Okay, I'm going to buy it from you. And at a moment, when the premium will be too large, will happen what is called a short squeeze. And this is going to be spectacular. So if I was a whale, which I'm extremely far from being, and I have never met a whale in my life, I guess.
That's exactly what a whale would say.
You don't know what whales, but I think I have never met any whale in my life, probably. This is what
certainly not on
I
this panel, right? Okay, Adam, I know that you followed the MicroStrategy trade very, very closely. Is that the strategy? The mother of all squeezes is we squeeze MicroStrategy and then we buy more Bitcoin?
I mean, there seems to be a kind of beta between Bitcoin and MicroStrategy, where if Bitcoin goes up, then MicroStrategy will go up 30% more, and conversely, if Bitcoin falls, MicroStrategy will fall further. So I've been playing that trade a bit to sort of, if Bitcoin suffers a pullback, which it will do in a bull market, switch from Bitcoin into MicroStrategy, and then when it recovers, switch back, and of course you benefit from the uplift. Of course, if you get left holding it in a bear market, you will suffer the downside too. But effectively, one way to think about it is you're outsourcing the liquidation risk, because MicroStrategy has some leverage inside it, and yet it's very hard to get liquidated because they are largely unliquidatable loan structures. So it's a way to play that market, and there are people who have taken a sort of principled short position against MicroStrategy, namely Kerrisdale Capital, which is a short fund that has shorted other things. Their whole fund is focused around developing a short thesis about why something is overvalued. They build the position, and then they release their research report, and then they hope the price falls immediately based on their clever report. But in this case, they released this, earlier in the year. The ratio dropped a bit, but then continued upwards. So one supposition is that Kerrisdale is being squeezed again, right? So it was definitely the case last week that Bitcoin had been flat around 66K, and the ratio between MicroStrategy and Bitcoin changed from 2.9 Bitcoin per 1,000 shares to 3.4 on a flat Bitcoin price, which is a huge percentage change, and then back down to 2.9, all within the space of 2 days. So I thought that might have been Kerrisdale failing, but probably it was just some kind of early battle in the long versus short.
Okay, bringing it back to the topic of the conversation, store of value. MicroStrategy's strategy of leveraging cheap corporate debt and then buying tons of Bitcoin seems to be really successful for their share price, right? It's driving their share price higher. But why aren't more corporations doing this? He's kind of, as you said, he's given a master class on this, and it seems like nobody's listening. So there should be a big driver for Bitcoin on corporate balance sheets and for store of value. Why isn't that happening?
It's like very puzzling, because not only did he do it and achieve it in a very successful way. But he gave kind of annual corporate conference to train people in the corporate management world how to apply this to other public companies. And to date, there have been very few examples following him. And of course, there are very many public companies with extremely large cash balance sheets. So I think people spotted, I don't know if it's authentic, but presuming it is a topic for discussion on Microsoft's board agenda, and so that's caused a bit of speculation. But I mean, we don't know, if they're talking about it, if they're actually going to do it. But it's certainly puzzling because it seems like a pretty obvious play to us as Bitcoiners, at least.
Paolo, yesterday I saw your keynote speech at the Thunderstorm event, and you talked a lot about the volatility that we're seeing kind of in the world and in markets, and the uncertainty, and gold price hitting new highs. What is the optimistic kind of end of that? What does the new financial era look like on the other side of that volatility and kind of the uncertainty we see in markets now? Is it Bitcoin acting as a check on government printing? Is it tokenized securities and people having more sovereignty over their assets? What is the optimistic case for the evolution of Bitcoin and its impact on markets?
Well, I know that I'm going to be called a paranoid, crypto anarchist to think about. I mean, I'm not trading MicroStrategy. I'm a bad trader. I buy Bitcoin, and I think that if you do the trade, and I appreciate that doing the trade you would make more money. It's just that to me you have also to hedge the fact that you don't have those Bitcoins. So you are maximizing your outcome on the short term and on the profits, but you are actually relinquishing the other component of Bitcoin, that is actually the freedom part, so the ability of remaining almost resilient to all the craziness that is going in this world. That is something that, of course, when you see everyone else making more money, and you are going in a FOMO mode. But I think that it's to me is an important trade-off. Like I think companies should have Bitcoin in their balance sheets, but they should not have, or they should try to do it through buying Bitcoin themselves and understanding what is self-custody, or anyway learn about use existing self-custody solutions that are anyway allowing them to maintain ownership of their Bitcoins and access of their Bitcoins. I think, as I shared in the last few days, many people here will be sick from hearing from me, but I'm pessimistic on what is going on in the world. Gold price is at all-time highs and is beating all-time highs basically almost every week now. And so that tells me that something will going to happen on a geopolitical level, or entire countries are preparing for that. And so we will not know when it will happen. And so when that will happen, you don't want to be in a situation where you're long MicroStrategy and short Bitcoin holdings.
Yeah. So, but what's the optimistic side? Like, what do we have to look forward to on the other side of that volatility?
I thought I was optimistic.
I need more.
Well, I think that we're going to see countries, governments actually adding, and pension funds add Bitcoin to their balance sheet. I think that will come. Could be just as an alternative, as a hedge against the failure of national currencies. I think that soon enough we will find out that the experiment of fiat currencies that don't have a limited backing is coming to an end. So after 1971, when gold was removed as backing for the dollar, and all the other fiat currencies follow through the same approach, then we are just going to see the end of that. And so there will be probably other experiments. Governments will unlikely all adopt Bitcoin at the same time, or a big part. But I think that more and more, as central banks are buying gold, I think that they are going to start buying Bitcoin for sure. And I wish they would, self-custody solutions. Self-custody doesn't mean like you have a company that buys a ledger and then hides it somewhere and etc. You can have things like multi-party computation systems that are enterprise solutions that you can use. You have like ledger enterprise solutions that are very, very user-friendly, right? And so that will happen more and more, and will just give a better edge to those companies.
Yeah, I think, Alexander, you're having a lot of those kind of conversations with your corporate clients, right? And last time we talked on the Bitcoin Capital podcast, which everyone should definitely watch, you mentioned that your clients were kind of, their interest was 70% crypto, 30% Bitcoin. And then recently that's flipped over the other way around. So what's driven that flippening? And how much of that is directed at like treasury and custodial solutions?
Yeah, so at Accenture, we've been working with 30+ financial institutions and multinational corporations over the world on digital asset custody, treasury, payments, tokenization. And in the matter of 2 years, we've come from 15% to 85% of European and American systemic banks that now have opened access to Bitcoin directly, indirectly, and that are launching solutions at scale. What that means is that 2 years ago, I had still to explain the difference between Bitcoin and FTX. And okay, so now I'm at the point, before it was blockchain, not Bitcoin. And now today my clients have recognized that at the end, Bitcoin is the best blockchain. And Bitcoin is the best digital asset, and Bitcoin is the best digital store of value. And of course, they will not say that publicly. But there has been a major shift, and what this means is by the end of next year or early 2026, you will have a majority of major banks in Europe that will have launched their retail or institutional offering for custody and execution on Bitcoin and digital assets. What this means is that 2024 was year zero of exponential institutional adoption, and that we have 10 years at least to go of very high growth in this opportunity of Bitcoin custody, Bitcoin treasury, and Bitcoin as a store of value. And what this means is Bitcoin will go from 0.1% of global capital to 1% and to 10% eventually. Then on the other hand, when we talk about corporate adoption, well, when I said 85% of financial institutions for corporate to adopt Bitcoin strategy, today it's only 5% that are thinking about it. But it's coming from 2% last year. So it's actually doubling from last year, and we expect that by next year, you will see a first wave of corporate Bitcoin adoption. It will start small, but it will then increase.
And what do you think has driven that change in attitude?
So what has driven the change is the FTX collapse. People have realized that Bitcoin was completely different and it was the best digital asset. Then when BlackRock launched the ETF, they recognized that Bitcoin was the best digital store of value. And if we continue this way, and if Bitcoin remains decentralized and secure, in the next cycle or the next one, institutions will have recognized Bitcoin as the best store of value, end of the story. But even in this scenario, this means that Bitcoin is going to 10 trillion market cap, eventually 100 trillion. But at this point, even at this point, Bitcoin will only represent 10% of global capital. So then the question is, what about the 90% of global capital? Debt, equity, real estate. Well, for this, there is also the emergence of tokenization of digital capital markets. And Bitcoin, slowly but surely, will become the global store of value, global settlement layer for these tokenized securities. And at some point, institutions will also use Bitcoin as a unit of account. This will take maybe 10 years, maybe 15 years, but it will happen. Bitcoiners already do it for their daily life, and institutions will do it as well. So currently, we are helping institutions to self-custody their Bitcoin on behalf of their clients. And over the next 2 to 3 years, they will gradually launch more value-added services. And in terms of the corporate treasurers, what is missing today is still seamless integration within treasury systems, treasury management systems, so that it's really easy for a treasurer to take a position in Bitcoin like any other instrument. But mostly, I would say it's still education and understanding of the asset class. but Bitcoin will win in the free market.
Paolo, you touched on sovereign adoption and the importance of sovereign adoption. I think one of the most interesting headlines of the last 6 months was Bhutan, right? It was revealed that they had mined, they didn't seize, they had mined a Bitcoin position of close to $1 billion. And I think their annual GDP is only $3 billion. Even more interestingly is that they held on to that Bitcoin. I think there's a lot of people who are mining Bitcoin at the sovereign level and monetizing it, but they held on to it. They built a very big strategic position for that country. I suspect that there's probably dozens of small countries doing this because most of the global south tends to be capital poor, but resource rich. So how does, expanding on that, how does sovereign adoption drive this kind of evolution of Bitcoin in store value?
Well, I think it happens that many of the small countries, Bhutan, but Central and South America, they don't have strong currencies. They have currencies that devaluate very fast against the dollar, or actually they are dollarized. Think about El Salvador. Right? El Salvador does not have a national currency since a long time, so it's already dollarized since 20 years or more. So if you are a small country and your national currency is not great, I think it's you don't have almost anything to lose to actually start looking at Bitcoin and start investing in Bitcoin, because gold is much harder, right? So you have to import it, and you have to it's quite complex actually to have a very strong, safe build vault for gold and so on. But with Bitcoin, it's easier. You can use it also for international payments in a much easier way. So if you are a country, you would purchase commodities from other countries. So I think in the end, it's for countries that don't have anything to lose is the wrong way to say it, but they have anyway. The smaller countries, the boutique countries, have more incentives actually to hold on to Bitcoin as the new alternative to gold, and is they can partner with companies that help them, like Bitdeer was involved in helping Bhutan in starting the mining facilities. They have mining facilities there. So with this private-public partnership, you can have private companies incentivized to help governments in actually growing the mining efforts. I mean, we at Tether, we are helping El Salvador, for example, in that effort, in specific effort, right? Because we want to help them to actually enlarge. They have already, I think, 5,000 Bitcoin or something in their own balance sheet. And the faster they accrue them, the faster they get to 10, 15, 20,000 Bitcoin. They are finite, right? There are only 21 million. So when the US will realize, or China will realize that they have to also play the game, then the small countries will be much better off. They will have a huge advantage, and they can capitalize on it.
Do you think there could realistically be an opportunity for a flippening where the G7 is very slow on adopting the technology? I kind of think we've seen that on the security side, where the countries like El Salvador or in Central Asia, they're more open to the technology, more open to commercially viable regulations, and they could build these new capital markets and maybe catch up or even leapfrog some of their regional peers or maybe some of the big financial centers. Do you think there's an opportunity for some of these smaller countries to do the same, to really grow their economies and catch up to some of the G7 and the big economies?
Well, also the interesting thing is about smaller countries that they are smaller, right? So they are more flexible. So for them, if they accrue, imagine 5,000 Bitcoin or 10,000 Bitcoin, 20,000 Bitcoin for a country like El Salvador that has 6 million people, is incredibly important. So if they allocate, is the percentage of allocation of the total Bitcoin in existence. That is basically the race that governments should think about, and. I think we are seeing that happen in El Salvador, and I know that a few other governments are looking into it because they see as the fastest way, the easiest way to actually flipping you have to maintain it, right? So if you sell all your Bitcoin, even if they are worth $50 billion or $100 billion, and that you spend in stupid things, then you don't have any more them, right? So you give them to someone else. So the ability to conserve over time Bitcoin and then potentially use it for international trade, but also make sure that you participate to Bitcoin mining to keep increasing your holdings. That is something that I think that they understand better than anyone else. I think that G7 group of countries is of course very slow, is much more bureaucratic. They're afraid of the judgment of the rest of the world, or they're all afraid of each other. Like, what do you think? What Italy would think? Oh, what France would think if we start adding Bitcoin to our balance sheet, and vice versa? When everyone else probably is actually looking into it and actually going to execute on that strategy.
That's great. Adam, I think the way that Wall Street looks at Bitcoin, I think, is exclusively from a scarcity perspective. The people like Paul Tudor Jones, they talk about it as digital gold. We had some comments recently from Saylor as well that are kind of along that lines. And I don't think they've modeled in or priced in at all things like personal sovereignty or censorship resistance or any of that, some of the stuff that Paolo touched on earlier. How important do you think that is to Bitcoin's value proposition? Because you can see a situation where number could continue to go up and Bitcoin kind of becomes captured within TradFi, but it didn't achieve those goals of increasing personal sovereignty and censorship resistance and personal freedom. So how important are those to the core kind of principles?
Yeah, I mean, it's, of course, it's beneficial that the ETF type products increase the accessibility of Bitcoin to a wider group of people who didn't feel comfortable managing keys or doing IT backup. But ultimately, the value proposition is that open networks win. You can have faster innovation on an open network. And Bitcoin is kind of electronic cash for the internet, and we shouldn't lose track of the fact that about 50% of the global workforce is in the informal economy, i.e. they're cash-based, they don't have government IDs. And so any of those people can access Bitcoin and use it to get access to the global economy, where currently they may be only captive within a local economy. So I think it's part of the value proposition, or what drives the value is the transactional and savings uses of Bitcoin directly, and the ETFs are more like the people investing in internet technology stocks, buying the Cisco stocks rather than the people like delivering the applications benefiting from the value of the internet. So they are sort of buying an access to the success story in a tokenized format, because Bitcoin has an asset. With the internet, there was no investable asset other than the companies developing the technology.
Do you think it's like the price action is kind of like a Trojan horse where individuals and companies get involved in Bitcoin, the price action kind of gets them excited, 1% becomes 5%, becomes 10% as the price grows, and then they kind of learn about the values around Bitcoin?
Yeah, I mean, definitely people get into Bitcoin through different avenues, and the previous to Bitcoin electronic cash systems were already very exciting to enthusiasts such as ourselves, but they were really stable coins. So even bearer unseizable money in a stablecoin format is interesting, but when you add the possibility to invest in the adoption and a digital gold phenomena, I think it's definitely another entry point. And it certainly seems to be the case that Bitcoin is not entirely neutral, that once they get involved and they get more interested and end up going down the rabbit hole and adapting their behavior, sort of driven by the incentives that Bitcoin brings.
All right, maybe to wrap things up quickly, looking forward for the next maybe 12 or 24 months, what do you think are the big milestones we can look forward to in terms of adoption with Bitcoin and it becoming viewed more as a store of value? Maybe, Alexandre, do you want to start quickly?
Yeah, sure. So very quickly, we will get banks to be launching offering for retail and institutional on-off-ramp and execution for Bitcoin. We will get corporates to adopt Bitcoin as a treasury reserve asset. And we will get more traditional securities to be tokenized on Bitcoin layers, such as Liquid. And we will get as well much more applications, but then a bit more bottom-up, not necessarily coming from the banks, but from the consumers in terms of retail applications for payments as well, that are fastly growing. Yeah.
Very good. Yves?
I think there is a trap which I would not like us to fall in. It's the Gresham theorem. Gresham theorem is the idea that if you have dollars in one pocket and Bitcoins in the other, and you want to buy a lunch or a Rolex, you will always tend to prefer using your dollars. because you know that the dollars, you know, the Bitcoin is the simplest asset in the world. You can completely define the Bitcoin into 5 proposals. It's digital, it's solid, it's decentralized, it's peer-to-peer, and there is 21 million of it. And there are not plenty of financial assets that you can summarize in 5 sentences. There is one, which is a dollar. The dollar is digital. It's peer-to-peer in a way. It's centralized, and there is an infinity of it potentially. Those are the 2 simplest assets in the world. One, there is 21 million of it, and the other one, there is infinity of it. So you are going to always try to spend the dollar and never going to spend the Bitcoin. This is why adoption, when you measure adoption, it's very important in my mind to look at it carefully. Because it's not easy to measure adoption. The more you understand Bitcoin, the less you're going to use it on a day-to-day life.
Understood. Paolo, Adam, closing thoughts?
Yeah, I mean, I think that we'll see continued emerging market adoption. Many of the transactional uses and individual holder adoption in wallets is in emerging markets, and in the developed world, it's increasingly seen as a saving or an investment. And I think there's a big gap in the market, to my mind, around Bitcoin-related products, like structured products and derivatives and de-risked Bitcoin that are kind of crossover assets that come into the financial world. Doesn't seem to be enough innovation around, everything is very simple. Like it's custodial-based trading, or it's Bitcoin in a wrapper in an ETF. But Bitcoin is a very interesting asset class for the financial world and for different types of ways for people to interact with it for savings or lower risk onboarding. So I think we'd be interested to see more evolution in that.
Paolo?
I think in the next 24 months we're going to see more and more interest in investing in Bitcoin-related companies. For the last 10 years, I would say, capital flew into altcoins mainly, and I think that the fact that now, as of 2024, this community made it, right? So we made Bitcoin accepted. The 4 phases of acceptance. First, they ignore you, then they will mock you, then they will fight you, and then they will accept you. Now, we made it. So it's giving to Bitcoin and Bitcoin companies an edge to prove that actually they were right all along, and all the rest was almost all the rest was noise. So I'm seeing already much more interest in building also new enterprises on top of Bitcoin as a technology.
Very good. Well, thank you very much to the panelists for today's conversation, and thank you for the audience for your time. Thank you.